But yeah, anyways, hope you guys have been well. I finally got the Discord. I've been procrastinating on this so much, man, about trying to get this Discord like up and running. And I organized it to the point now where it's really, really elegant. And you guys can see even the private side or the premium side is um pretty organized. Like I have everything here. I'm gonna probably make like a designated video, like just a quick video going over this and like what we want to do later on. But yeah, I also made a Spanish chat. So like for my Spanish people, you guys can just go to my Instagram or go to the old Discord and you'll find links to both channels there. It's um I do want to help out that Spanish side as well, but I've kind of got everything going. Like, let's see, what is pin is that's like the pin. So I did my best to try to consolidate everything into either forums or just a little bit of chats. Like um this stuff you don't need. And if you're wondering, I have two economic channels because the bot for this one, the Forex News bot, it's not really that good. So they kind of go on and off, but I really like the setup on it, so I'm gonna just keep both. And then this one has an issue where it sends the alerts like 1 hour early. So if you guys are on this channel and you see an alert for news, it's actually gonna be 1 hour before. Um, but yeah, either way, I'm still just gonna leave that on there. But but yeah, if you guys have any questions, concerns with any of these channels, just feel free to ask. But I did want to also make this because the biggest thing that I kind of wanted to implement was like this. Where is it? Where is it? This. It's like I want to incentivize people to be active in the group chat. So like the only way I can incentivize people to do something is by giving them something or letting them earn something, right? And how depending on how the system works, I can actually try to imitate the style to build like roadmaps for traders on how to go about so their journey, etc. But that's a whole lot more complex than trying to just do it for a Discord server. But anyways, like if you guys are active in the chat, um then you'll start to get a leveling system. If and every time you gain a level, you're gonna see it here. Um, yeah, you're gonna see it here. So basically, after a couple of levels, let me go back. Basically, after X amount of levels, um, you're either gonna get a discount. I'm gonna eventually give out like free one on one sessions, which is like a free 1 hour call. Um, and it'll take a while to get there. I'm not gonna lie, it's gonna take a while to get there. But the reason why I made it semi difficult, like for example, here once you get to level 100, you just get all the benefits for free. It's just like, okay, well, if you've been active for months on it, because it's gonna take months to get to level 100. Like you guys are seeing the level ups now. Like it's easy to get to level 5, right? But it's harder to get from level 5 to level 10 than it is to go from level 1 to level 5. It's an exponential thing. So like by the time someone reaches level 100, like you're either going to be really experienced, you're going to be a decent trader, or you're going to be actually committed to my group. So like if you fall under any of those categories, like why not just give you the premium stuff? Like you've earned that in my opinion. So I wanted to do that just to kind of just try to incentivize people that are in the group and that are always active in the group to feel like their efforts aren't just, going to nothing. And as for the max level, which is 150, I don't know. I mean, personally, I wouldn't know what to give at that point, but I guess if you guys have ideas, I'm open to hearing. But but yeah, other than that, you guys can go through all of this stuff. Like I'm hoping to bring on workshops next year. I've been building a scanner, which is like going over sweep setups. And then there's Cove, which is the pretty much the Web3 project we've been working on, and then obviously ASEF here. I do have to include some of the track records here, but I also have like another side project that I'm gonna add to ASEF, which is associated with options trading. I know this really, really good options trader, and he's found a way to kind of streamline his process. And if people are interested in just making side money off of that, then hey, like the option's gonna be there. And if not, then we can stick to manual trading and these calls, right? But other than that, feel free to go through the channels, like all of this. I pretty much refine. I tried to organize everything the best way that I could. So yeah, hope you guys like it. And yeah, much better than the old Discord in my opinion. I already went ahead and deleted like all of the stuff. So just need to wait for everybody to kind of transition over. But yeah, let's go ahead and get started. Excuse me. Put this over here. So interesting week, right? Interesting week. I took two trades last night. One was a break even, one was a winner. Um, I did take my partials, you know, but either way, this was actually not too bad. But yeah, before that, I do want to go over probably the trade of the week that I had this week. It was a really good gold trade that was based on a intraday frame, and then I just kind of looked at my scalp continuation. So um, let's see. So clearly we're on a swing time frame, and the only thing that I care about in this swing time frame is where we are directionally. So you guys know that as soon as we take out a recent high, I don't like to take the immediate continuation. I don't like to do that. I like to see what type of reaction I can get internally. And although we're potentially within a no man's land, and by that I mean because we're technically stuck within the range and we have a low, high, low. I do like to note my sweep setups whenever they're continuations, right? So the difference between a sweep setup that's a continuation and a sweep setup that's a reversal, I primarily do continuations. So we have a bullish, we are bullish directionally, and we have a bullish a sweep setup. So I use the bullish range that created a new internal high as my sweep setup and as somewhere to aim for. So because of this, right, I have to assume that I'm bullish. But if I was to use, for example, this high to this low and then kind of have a potential sweep setup, the only way I would ever have a sweep setup that's a reversal based scenario is if the internal model or the internal time frame is opposing the higher time frame model. So let's say this high was not here and this high just kept going up, which means that we are externally bearish. Therefore, I know that this is internally bullish. So I would be able to justify this as a bearish frame. And then if I have a transition, then I could justify the bearish swing, the bearish sweep. So that's the only way I would ever use a reversal sweep. But more than likely, you guys are going to see me try to force the continuation. Like this is bullish, so we have a bullish range. So let's force the continuation. And the biggest thing is also that we have a big bullish candle here, right? So that kind of just framed up my bias. You sold instead of buying because I was targeting equal highs. Yeah, I mean, you guys, you know what I say, bro. It's liquidity is not a reason for my bias. It's just a target. If I see equal lows, that does not mean I want to sell, basically. Um, and so this is actually not a good. This is not a good picture. Okay, this is a better picture. So my entry, right? Obviously, this is that big bullish candle that came from FOMC because we I think we dropped like 25 basis points or something like that. So basically all that means is dollar is going down. That's pretty much all that means longer term. But uh but even you can see here there is a internal sweep setup, and then based on the manipulation of the news, right? We had a dual sweep here for the people who have the sweep blueprint. This is one of the models, which is the dual sweep. And then the dual sweep led into the break of structure with high momentum. And I'm clearly highlighting here the final sell to buy. So rather than using an entire zone or an entire candle of interest, I'm using the entire zone because this implies a higher time frame point of interest. So I have the entire zone marked, and my entry was relatively aggressive. I'm not gonna lie, my entry is relatively aggressive here. But essentially, right, the reason for my entry here, actually, can somebody like it's on the screen. Can somebody tell me why I took this scenario or why I was keen on looking for this scenario? It's somewhere on the screen. There you go. Exactly. The multi-time frame engulfing based on the M5 move here. So we have an M5. Pretty much we changed the character here, and you guys know that by changing the character, I mean that the shift in momentum, right? I think people call that displacement or something. I don't know. I think I've heard that before, but essentially, I like to see momentum come into play. I like to see momentum. Excuse me, momentum come into play. We swept Asia lows. We tapped our POI, and we had an engulfing on 3 different time frames. So I just thought, hey, I think this is worth it. So based on that, I'm also creating an unsubstantial new low, which means I have a sweep engulfing scenario, right? That also technically could be considered an LGC, but that's still just a CBOS based on the internal leg. Anyways, but yeah, that ended up playing out relatively nicely just because I really liked that M30, M15 close. And I ended up not hitting any kind of trailed stop. I mean, any kind of trailed stop. So I think I got this question in the private group. I think like 2 days ago, or like in the public group like 2 days ago. It's like, how do you move your stops? It's like there's various ways to go about it. So what I like to do, typically, is the second that we have any type of I like to do this above the scalp. So like anytime we have a scalp that or anything above a yo, okay, yo guys, please don't migrate my screen. If not, I'm gonna have to take that permission off.
Oh, that was a mistake, sorry.
Okay, no worries. But what I like to do is basically anytime we're above a scalp time frame, which is like M15, stuff like that, if I see an LG, which for example, based on this time frame, this is an LG. But I will not use that. I will not try to use that. I'd rather prefer it to be on an M15 time frame where the candles are a bit not only bigger but clearer, at least from the directional POV that we're looking at, because we're looking at an intraday high. So if I'm on an M15 and then I see a liquidity grab, then typically I can move my stop, but I would only be able to move my stop here, right? But really, if you want to worry about it conservatively, is that if you're aiming for an external target, which is this high, or there's actually an H4 high above here, then typically you can also wait for not only the immediate high to be taken out, but the immediate range high. So as soon as this is being taken out, then I can start moving my stop, right? And this varies because sometimes this range high can either be there or it can be here, but typically, if I see that opposing structural range be taken out, then that is a clear sign for me to move my stop. Right? So either after an intraday LG or we take out a range high or low, right? Or the opposing, the inverse, the vice versa. But yeah, that ended up being a pretty nice scenario. Do you have any questions or concerns here? Relatively straightforward. We're looking at an external model, external sweep, and then we're looking at an internal potential sweep engulfing. And then we got the delivery. So any questions, concerns with this?
For
You don't have to respond. Oh yeah, but yeah, I'll continue.
so regarding the break-even thing, sorry. So after we took out this low, this confirmed low, and we broke this high, can we
No,
not
no, 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 no.
plus
Not
it?
that low. No, no, no. That this high. Because if we break this low, then internally we are bearish. But we have not reached the invalidation yet. So I can't move my stop, but I can't move my stop because the internal structure is bearish.
See.
That's why here you see high, low, CBOS, completion of order flow, and then a reversal. So no, it's not this high. This is a CBOS because the internal structure is bearish because it aligns with this level of structure. So this is bullish, but this is bearish because we need to be bearish to reach the discount, which is this.
See.
So continue.
Yeah, so I was thinking that because yeah, I get your point. Like this is actually more like confirms the pullback, Well, when we took out this high, I was thinking that actually confirmed the shift based on continuation of this high and the pro trend when we broke
Mhm.
out this high. So more like the stop loss, the trading stop should be here. If you get what I mean.
Yeah. So the confusion comes here. Like I don't know if you remember what I said a couple minutes ago with sometimes you have to realize how many times you have to lose, or like for every potential winner there comes certain losers or certain amounts of losers. So I'll
Yeah.
be honest with you, this is not the best type of trade. This is not the best type of trade because realistically, if I have internal structure, if I'm looking at the opposing side, then I would hope for this to be swept, and then I have a transition here, which is like, the transition there, right? And because I'm technically being very aggressive, just because the only reason I took it is because every single time frame is bullish, right?
Mm.
So I'm looking for just any excuse to be a continuation. Because, for example, if I would have waited for the internal structure here, this is bearish, CBOS, and then if we have a solidified high here, then we have a CBOS. Then by the time this converts, right, which is here, like I probably will miss out on the setup.
Yeah, that's true.
You see what I mean? Because then the only way I could have got the setup after we got this move to the upside would have been if I waited for this. And it actually didn't. I don't even think it topped, if I'm being honest. Let's see.
Because like I'm kind
So
of
that's
going.
just the risk that I'm wanting to take, basically. But this would have been like essentially the conservative setup.
Oh, I see.
Mhm.
Because I'm kind of going through the same struggle at the moment where I kind of move my I don't know, maybe I'm moving my stop loss wrongly. It just stopped me out at the trade stop, then go to the target.
Then don't move your stop.
I see.
Then just don't move it. Like there's like really like trailing your stop is a little greedy if we really think about it. It's a little greedy. So just if your risk is accepted, if your entry is there and the risk to reward is worth it, then and if you're getting mistakes or if you're seeing mistakes with trailing your stop, because managing the position can mean a lot of different things. Right? Managing a position can mean trailing your stop, whether it's like to here after we make the bullish move to the upside. You could move your stop. You can hedge a position, which is like if you wanted to sell here. Or there's actually another way of hedging, which is like my friend told me about the other day. There's actually like I was mind blown. So like some people, what they do is if they have a bullish scenario, they will hedge their position by having a sell stop with the same amount of stop loss pips at a 1-to-1, so that even if you lose and it continues in the opposite direction, then you walk away with a break even.
Mm.
That's a very interesting approach. I didn't know people did that. But there's so many ways to manage your position, bro. So you don't have to try your stop. There's no concrete rule that you have to try your stop. Because,
So
for example, this is at 1 in the morning my time. I took this trade, I went to sleep.
mm.
Like whatever happens, bro. Like it is what it is. Like what I'm not gonna lose sleep over my trades. Like, it's not that deep.
so so in this context, what do you think now is capital protection? Because sometimes I remember
The
when you
cap
used
no, capital protection, bro, is your stop loss. That's all it is.
oh, I see.
They like don't think too hard about it. Don't think too hard about it. You don't have to think that hard about it. You've accepted your risk. If you're willing to lose the X amount of risk that you've put on the trade, then you're fine. You're fine. Like don't think too hard about it.
Thank you.
But yeah, there's actually now that I see this too, there's actually a sweep setup here. When we have a dual sweep and then potentially an engulfing there. Do we? Maybe. Well, you can't see it here, but yeah, there's technically an engulfing just based on this closure. Um, but yeah, that's this setup. And then let's talk about my setups from last night. I was low key kind of looking at some reversal setups last night just because of how deep we've been going, and GU GU actually swept a very important high. So if I'm looking at this here, right, my bias yesterday, right, I'll actually show you guys. I'll start with GU. But with GU, this is my bias yesterday. I was trying to pretty much essentially look for a continuation to the upside. Why? Because like I told you guys, what I just said with the gold scenario here is after we take out right? Like this is the H4 time frame. So we just took out a major high here. We took out a major high, meaning I don't want to take the immediate point of interest here. I don't want to do that. I want to see best case scenario, I see a sweep internally, and then we go higher. So realistically, that's kind of the same situation here. This blue line here is a daily high on GU. Okay? It's a daily high. Therefore, we just swept the daily high after a very impulsive week. So if I wanted to continue to be bullish, I don't think it makes sense to continue structure. Like the problem with trying to trade, like the whole trade trend is your friend thing, it's not necessarily as straightforward as you think. Oh, that's a terrible drawing. Anyways, right? Like the issue with trying to trade the trend, essentially, let's say you're trying to just buy these reference points. The problem with that is that eventually you're going to get a scenario where you take this hot low out and then you have a transition and then you continue higher. And all this is it can there's one reason why this happens. Can somebody tell me why?
I think it's just the range, depending on the range when it have taken out the major structure. So
External solidification.
yeah,
Make
external
it
side.
simple. Make it simple. No, external CBOS. This is a CBOS externally because we are bullish. So this solidifies the high. So we now have a low, high, pullback, and continuation. This is why I built the models around failed scenarios. I don't wanna I don't want to build a model that focuses on trading these scenarios here because I'm kind of at one point it's going to fail and I cannot do anything about it. So I'd rather look for this type of scenario because this type of scenario is much more consistent in terms of like if I get a transition after we break a internal or once we have an internal bearish trans or internal structure shift on an external trend and I have an internal transition here, then the odds of this working out is much more probable in my opinion based compared to the other setups. So like I'm looking for this. Like I'm looking for this. Right? And but the problem was like obviously London session's about to start and I'm not really and I think there was a news release last night on GBP. So we saw a big move to the downside here. So like I said, we just took a daily high. And because of the tendency of taking out a daily high, I'm more than likely looking to see this kind of go lower. And then with the internal bearish push from news, I kind of just saw, hey, maybe it's worth taking that position. So I started to look at the internal structure. So if we're looking at this from a bullish POV, we have low, high, CBOS, and then the retracement has started, but the retracement has to be bearish. But we actually have structural disruption. We have structural disruption, but more importantly, right, the structural disruption is supported here. So not only did we have a failure to continue higher based on this low being broken here, based on that break, because this is a solidified low here. So because we solidified that low, we would anticipate this to kind of go higher. So because that didn't happen, and then we came back, we mitigated a POI, and then we had an internal LG. So like, okay, we're bearish. Like that's just it's just the internal structure is bearish, right? And so my position was to go from here down to previous low, and then obviously from there, if I could find a buy scenario at a certain time, then it would make sense to do that. So this is my position, and I ended up topping that. And then as soon as I saw this, right, we had an internal sweep. Then we had the engulfing on the M3. So this would have been actually a very, very good conservative entry. This is, in my opinion, this would have been the A plus setup because we got the transition, but obviously the internal structure here needs to be bullish so that we can reach the POI. So as soon as we do that, and then we have this engulfing, I like this engulfing because it engulfs the entire candle. And it literally had just closed. It had just closed. So um if we go to GU, M3, right? It just closed. So that itself would have been a great, great reentry there. So then from here, it's just kind of just managing a position. So this is what I mean also with trailing my stop. I moved my stop to break even, which was because my entry was essentially at the break even after this break. That's the rule that I have. When the opposing or the internal or the immediate external range is taken, that could be one rule. Or um, the only reason why I can't really use the opposing leg is because the opposing leg TP is my actual TP. So there's actually like some decent scenarios here. There's actually a good continuation, right? This is a good example of a LGC here. So we have a LGC, and then this would have been a great reentry to then aim for this target, which this is much more conservative than this because this can model the frame of what direction we're looking for, and then we have the continuation setup. Excuse me. But yeah, does this trade make sense, guys? Do you guys see what do you guys see what I'm seeing here? No, it's M5. Excuse me. And as you can see, we swept and then we're getting that reaction that we talked about. There would have been no entry. So pretty neat. Pretty neat, right? So let me go ahead and I'm going to put this in the premium channel. And then I also had this bias for USDCAD, but unfortunately, it gave me the bearish reaction. See, so I wasn't too interested in this. But I mean, I think there's technically a reversal setup here. Excuse me. But yeah, I didn't this would have been, I mean, I guess there was still a setup here if we consider this the new low, and then as soon as we break this high, it's solidification. Because we came back into the buy to sell. As you can see here. Buy to sell. That's where it came back to. Pretty nice. But yeah, that was a bias for UCAD. I didn't get that though. So if I don't get the immediate bias that I want, I'm kind of just staying away. Um, and then EU, I was looking for a similar setup to GU, but the problem with that scenario was the fact that if you zoom out here, we just swept major high. Major high. So personally, I don't want to see this go lower. I like if it was gonna go lower, it's now, or it was last night. I didn't want to see this go lower. I kind of wanted to see a buy to sell here because then it would align with 71 and then it would have aligned there. But just due to the fact that I broke even, and we have a very big H4 bullish candle, I'm expecting this to go for highs. But at the time, we had taken out right a major high here, and I'm doing this after every single high that's being taken. So if we're getting, like, for example, at this point, because we have unwillingness, we have a break of structure, I'm anticipating us to go back up here. Like there's I mean, obviously, like a reaction can change that. Like for example, if if from here, right after this big bullish candle, if we break that low, then that's internal structural disruption. Therefore, we have a potential bearish sweep model in play where we can have a move to the downside. But I would need a decent reaction there to the downside in order to justify that. But if that does not happen, then I'm aiming for here. Right. And if I'm aiming for there, then that means that after every single liquidity high or any decent swing high is taken here, then I'm looking for the pullback. I'm looking for the pullback. I'm looking for the pullback. After every single high is being taken. If I can find the pullback, then I can then frame my internal sweep model. And then let's say we're going up. Then I can look for a continuation higher. Sure. Like shitty model, right? A shitty drawing, but you guys get the gist. So I guess so based on that, I'm looking to see if we can get a pullback after this. And after we get a pullback after that, then we can potentially see a continuation to the upside. And there was I mean, Buying today would have been a bit difficult for me if I'm being honest. And I'll show you guys why here in a bit. But anyways, I was looking for this at first, but you guys know the reaction is everything. Like just looking based on this scenario, I could have a technically a bias, but technically I don't have a bias. This is just what I would like to see. This is not what I'm actually seeing. What I'm actually seeing now is either if we go and take out this low and then we have a transition, then I'm bullish. But if we go the other way, then if we react and we have a transition, then I'm now bearish. Right? So it just depends on the reaction that's given to me. So based on that, right, I saw that we came back and we took out, or we came back to mitigate a previous POI. And the reason why this POI was very um noteworthy for me, because technically this is the buy to sell, right? Is because we took out structure here. So if I'm looking at this from a continuation standpoint, if I took out this high, that means that I've solidified this low. So if I've solidified this low and then we take it out, then that is structural disruption. So if I have structural disruption and I have this in here, then I can now just look for a reaction internally. And I was really aggressive with this scenario. I'm not gonna lie. I was pretty aggressive here. So this is a micro transition, but this is just a tendency play. What I mean by tendency play is like you guys know the whole like SMC basic model. It's like take out equal highs, and then if you have a internal engulfing or transition, then you can justify a opposing move. So here you can see. I'll actually go here to show you guys. The only reason why I took this trade, right, is because I implied the principle of solidified points internally from a micro scale. So if we take this low out here, you guys see that we took the candle low out, right? I'm not crazy, right? We see this, right?
Yeah.
Took out a micro low, which means this is a solidified high. This is now a solidified low once we take that out. So as soon as that's taken out, that's a reversal in structure, and we've taken out liquidity there. So if we took out liquidity there, I promise you we'll probably see something on the internal time frame. I just don't like to, I don't really use these time frames anymore. I don't really like them if I'm being honest. But yeah, you can see, right? We're always looking at lows that create highs. So we have a low that created that high there. As soon as that's taken out, that is, in my opinion, the reason for entering this position here. So you guys can see it there. But I don't need the 15-second time frame to note that. I just need to note candle highs and lows, wick highs and lows. It's all that, and then lows that create highs, highs that create lows. That's the entire basis of market structure, right? Highs that create lows, lows that create highs. So we created a protocol. Okay. Oh, right? If we have a high that creates a low internally, then this is a solidified high. And then if we have a low that created a high, then this is a solidified low. So once this is broken, if I'm looking for the conservative model, then I wait for that break. Then that high that created that low is solidified high. And then I have that internal range to play off of. That's like the solidified points is the key, the heart to my entire system. If you cannot read solidified points, then you can't really use what I'm using, if that makes sense. But um, but yeah, like for example, here, if I'm looking for the conservative approach, then low that created a high, that means that we have a solidified low. So therefore, once this is fully broken out, which is there, then I can use the internal range. So that would be this high created that low. So from here, we created an internal range, and I can use the entire buy to sell. This would have been the conservative entry, but it's late. So like at that time, I'm already like in bed, like looking to go to bed. But but yeah, am I making sense here, guys? Does that make sense? I was a bit aggressive here, but I was justified because of solidified point concept, solidified point principles. But the conservative entry would have been technically here and stop loss there. Right? Am I making sense there?
Yeah.
Cool. But yeah, I wanted to take majority off there, if you guys can see here. The reason why I wanted to take majority off here, oh, I didn't note that, really? Okay, there we go. I did note it. Majority of here equal lows, and because we're also and because also the original bias was this. The original what I wanted to see was this. So I want to take off a lot of my position here just to make sure that if this is to reverse, then at least I took something out the table, you know? So luckily, we got the internal move to the upside. And then because we got the internal move to the upside, took out that high, and we then took out that low. So therefore, we are now internally bearish. So I'm like, okay, I took my partials here, and now I'm able to um look for or just kind of hold this. So all I did was after we took out, like we said with the rules before, the external leg, once we took this out, I can now move my stop loss here. I can move my break even there. I've taken my partial. I have my break even. I mean, my chart stop there because this is the high that created the low that created that push down. And then I actually could have probably used the LGC to potentially move my stop here, but I was not really looking at the charts yet. I woke up like right around like here, if I'm being honest. Um, but yeah, this ended up just coming right back to my chart stop, which is unfortunate. But yeah, you guys see kind of what I meant there. And there's something in the back of my mind last night too, where this just looks so clear to me. Where was it? I think it was M5 or M10. This just looks so clear to me. I think it was M10 maybe. It's just like this area here where we had like a you guys can see the breakout and then we had like a sell to buy here. This just seems so clear to me. And I don't know why I didn't use that as my TP. I should have because this is a common mistake I make when I'm looking for reversals. It's like I like to get a bit greedy, a bit hasty with how far I want this to go. I'm like, yeah, okay. If this breaks here, then we're gonna go here, and then if this breaks here, we're gonna go here, you know? And it's a bad habit that I have because realistically, this is still bullish, you know? So that's also why I took off majority here. But yeah, the trust stop was hit. And actually, if I was looking at this, like if the trust stop was hit and we technically have like a reversal model here, just hide that there, whatever. And that's actually would have been decent risk reward. It's like a 1 to 4. That actually would have been decent. Um, the if I would have seen this now be a pullback low, and then we have an internal LG. So this is the perfect LGC. This is well, not the perfect, but this is one of the perfect LGCs because whenever you have a solidified range based on an LGC, which is like we're bullish, we have the pullback, right? And then if we're looking at highs that create lows, then we're looking at internal structure, but then this is not really relevant. But we have a high that created a low. We have a high that created a low. We have a high that created a low. We have a high that wanted to create a low but failed. So that is the transition because it's solidified points. So high, solidified high because of this break. So then once that breaks, we are now bullish and we're now aligned. So whenever you see a transition like this, where it's internal structure, like if we focus on course one content, it's like lower high, lower high, lower high. And then this is technically lower high too based on solidified points. Once that lower high breaks, right? This is course one stuff. Like a lot of people don't really watch the old course stuff, but it's like I still use some of the frames from back then. So lower highs, lower highs, lower highs. Once that breaks, there's an LG. There has to be an LG in order for the lower high to break. If not, it's not a lower high that's being broken, right? Um, so now the easiest thing you could do is literally easiest thing. And like you not only have an entry, oops, sorry, you have a target because this is technically a CBOS externally. We're still aligned. And it's cool because shit, I'm pretty sure this is a 71 too. Like, God bless fractals, right? Like, you see, 70. So it's hindsight now, but like, if I would have seen this maybe at the time, maybe I could have potentially taken it, but I would have had to take it like right before the Zoom. But anyways, does this make sense? This is one of the easier models that we can use, and it's aligned with the LGC. So I do want to make that PDF for you guys. The private group is I'm gonna make it a more like extensive version for the private group for the LGC model. Probably have more examples in there and stuff, a little bit more notes. But I do definitely wanna uh do that this weekend. That's gonna be like my task this weekend is making that so that then I can start doing free trials for this, right? Like do you guys what do you guys think about the tool that I have here, my indicator? Any thoughts on the indicator? Because I actually do genuinely use it. Like I like it. It's a pivot system that's relatively conservative, and I actually have like an entire guide for it too. I have like an entire guide for it. And then if you guys want, this indicator is free. So that indicator essentials is there. If you just type in RCV essentials. Sorry. What the fuck is this? Uh, what is that? Oh, what the hell? Yeah, but if you guys want the trading sessions and the this, that is free if you guys want to use that. But yeah, do you have any questions, concerns before we get into case studies? Do you have any questions, concerns with GU, EU, gold? Hmm. Before we move on, anybody? Cool. No questions, concerns. Cool. I guess not. Let's get into the case studies. Okay. We can I have some in the group, so we'll go ahead and do those first. Actually, let me just send this quick message. Cool. Okay. So let's see. This guy's been killing fucking gold lately. Okay. Shiva before. I like this solely because although we have bearish momentum, we then swept liquidity. We have equal highs, but then we had internal structure be confirmed again. So then we have a sweep and then we have a high that created a low being taken. So I actually do like that. Okay, it's not bad. I like it. It's just like a typical setup from him. Not gonna lie. Yeah. So this ended up losing. Okay. So I do like that. Now, the only key thing that you need to note here is that, right? Like, did that happen before your screenshot? Let me see. I think it did. Yeah. So personally, I don't mind you taking this trade because this is also what I mean with what I meant earlier in terms of you have to kind of anticipate or you have to acknowledge that in order for you to take a winning scenario, it has to come at the cost of something. And that could be potentially multiple losing scenarios in the future based on that same criteria. Um, so this fits like relatively the same types of trades you sent me like over the past like what 2 months. So the only thing to note here is the fact that there's a reaction before your entry, but at the same time, like I wouldn't have opposed your entry even being here, right? Or even this entire region here. So I would just note that you have a reaction before APOI. So if that's the case, then maybe you could just wait for another transition and then go higher. But I'm not opposed to the bias to the trade. 2, 3, 5, back to 1. Okay. Okay, this is a great LGC model here. So bearish direction, CBOS, internal is bullish, right? So then you have a CBOS once you solidify the low and then you break that. So once you break that, you now have an LGC. And so in this scenario, you could even have a Fibonacci here. And I'm not opposed because this is relatively the same scenario to my GU trade. Relatively the same scenario, right? Because you have a structural disruption. If I'm zoomed in directly, it's an LGC based on this level of structure, but based on so from a micro sense, it is a LGC, but from a scalp minor intraday sense, it is a SD, right? And the thing is that they're both the same model, but they're presented in inverse ways. But you need like if you guys have a model, you guys should have protocols for both sides. Like if it like pretty much most of the core models are LGs, but the LG itself can be presented in different ways based on the different levels of structure that you're using and where you're looking for the type of scenario. For example, a SD scenario happens because this, if we go to like H1, H4, we're pretty high up here. We're pretty deep in a premium. Whereas an LGC can really happen after you see a transition, LGC, LGC, etc. Right? So the important thing is to note the reactions internally. That's the main thing, right? So if we go back to his thing, right? This is a very good scenario because you have a momentum, a high momentum push. So what you want to acknowledge here more than anything is the fact that this happened. Because if this does not happen, you cannot be bearish. Because a lot of the time, even if we're bearish here, I'm going to see people say, oh, break of structure, oh, point of interest, oh, bullish POI, and we're going bullish. That's like a typical mindset that I have. And the that I have, not that I have, that I see, sorry. And the biggest issue with something like that is just based on the nature of what you're looking for, right? Majority of the time, if we see something go into all-time highs or go into a deep premium, we're looking to sell or we're looking to trade against it, which is terrible because we should always try to force the continuation. Therefore, if this is bearish, then no matter what, I'm going to look for the bearish scenario because this is a CBOS, not a change in direction. It's just a pullback initiation, right? So then we have the LGC, but technically it's an internal SD. So, all that matters is that you have a low that created a high that then was broken. So that is the sequence, right? And from here, you can just have the Fibonacci. So even if you can consider LGC based on that previous direction, then you now have, right, the LGC model. So if you have the LGC model, then you can really go about the entry in many ways. You can go either Fibonacci, you can go uh, you can go based on the buy to sell, right? But that's kind of already been tapped. So we can go over the the internal buy to sell here because it did take out internal high. So we could use the entire POI, which is, I think that's what you used. But more than anything, it doesn't really, the entry isn't really that important because you just need to find your excuse to enter with your SL letter validation. That's really the main thing there. And I'm pretty sure this, yeah, so failed to continue higher, broke internal structure, bearish, and then we have the LGC, which is then bearish. So I would actually aim for here, but I like that you're being conservative with the entry. I mean, with the TP, sorry. Yeah, you see, I would have aimed for this low. I think it hit. Did it hit? Yeah, it did hit. But yeah, this is a very nice trade. I need you to study the elements on this. This is actually like super A plus. I really like this scenario. But yeah, I just would have aimed for the previous low just because if we're looking at a bullish structural range, right? If you're looking at a bullish structural range, I don't know if this swept actually. If this swept, that's a different story. Okay, it did sweep. Okay, so I see why you're then aiming for that. But either way, I would still aim for this low just because this is an internal sweep model, right? If we could see the sweep here, then if you can then anticipate how you go about the reaction, which is this is an SD variant based on, or an LGC variant, sorry, of the sweep because you're bearish here or here, sorry, then we're looking for the sweep. So we have to look for the range low. So that's kind of what I'd be looking for there. But that's a really, really, really good scenario. Okay, before. Oh, did I skip a scenario or did he give me the same one? Or did I go to a wrong one? No. Oh, never mind. It just looks the same. Oh, that's actually great, guys. I know a trader is good when the scenarios look identical or very, very similar. But anyways, another LGC. We have, I think this is after that scenario, maybe, but anyways, we have bearish range, we have LGC, and yeah, I mean, I don't like the POI, I don't like the entry here because this is not a buy to sell. Um, and there is really no buy to sell. So whenever there's no buy to sell, I don't really like it because is this now potentially an LG and then a reversal rather than looking for buy to sell and then TP there? I don't like that because I think this is immediately after the other scenario, which means, and not only you have an engulfing there too, I don't like that. So I don't know if this is a major swing point. So if this is a major low being taken, then you guys know I don't like taking the immediate continuation, like I said. Uh oh, it did it. It did it. Okay. Cool. Okay. So yeah, nice. See, so I would have rather waited for this break here because I don't like this POI, but I do like that your validation is the SL. But I would have liked to see this transition here, but maybe then the risk reward isn't worth it, right? So overall, good trade. Before, okay. Okay, this is fine. This is identical trade. Very good. So you see, kudos to this guy. I need you guys to take notes on this. This is if your trades look very, very alike, then you're on the right track. H1 engulfing, that's perfect. H1 engulfing, that's actually perfect. SD. Um, no, I wouldn't call it SD yet, but it is unwillingness because we broke structure and then we failed to break the high. So it is unwillingness, and there is a sweep here. So we have equal highs for the future, but in order to aim for that, if the internal structure is bearish, I want to see these lows get swept and then get a transition. Um, yeah, perfect. Bingo, bingo. See, so I don't think Daniel's on the call anymore, but if this is what I mean, like just because there's equal highs does not mean you have to buy. You know, that does not mean any pending liquidity doesn't mean shit to me at all. It never will. Just because you have pending liquidity, it just shows a target for where you can potentially target, like where you can look for. That's all it is. Like I play based on swept liquidity. I play based on incentivized liquidity, which means like if liquidity is being swept, then I can make a model around that. But if there's equal highs, I can't really make a model out of that, especially if we're trading CFDs, because maybe on this broker, this is equal highs, and another broker, this is a sweep, So pending liquidity, guys, don't ever use that to influence your bias. Don't. It can work, but majority of the time, I don't want it to lead you to confusion. And I mean, either way, there's equal lows and equal highs here. So if there's equal lows and equal highs, then it all just depends on the internal reaction to see which one you're aiming for. But yeah, it's very good. Very, very good. Yeah. Very, very good. Okay, so now we can get into other ones. Cool. Do you have any questions or concerns? Any questions or concerns, guys? No? Before we get into the other case studies.
Fredo. So,
Uh-huh.
one of those trade you mentioned something about um like when you break a major high, let's say a daily time frame or a weekly time frame, and let's say it's too high or it's too low. Normally, like you said that it is not ideal to actually kind of chase that is going to reverse. But normally you're supposed to think that it's in too deep discount or too deep premium, then you should decide to buy or sell. Do you think it's
Mm-hmm.
actually wrong, or it's actually bad to start buying when it's in too deep discount and start
Look.
selling when too
Uh-huh.
deep?
Uh-huh.
You understand what I mean?
Uh-huh. Yeah, look at the like I'll show you guys another trade from that I posted in the premium group. Uh mm, here. So like look at this. Shit. So like here, right? We're technically at a premium, but I have liquidity pending, and I ended up looking for the sweep continuation. We have an implied sweep variant. So we have a sweep engulf. We have a dual sweep too. So I have that in play, right? And that ended up playing out. So like if we're too high, then I will it just depends. It just depends like on whether or not the external liquidity has been swept or not. If the external liquidity has not been swept, then like I said, like I told you guys before, like I don't want to trade this, right? I want to trade that. Right? I want to trade that always because that shows that we've solidified the pullback and that I have a reason to go higher. Because externally I do have a reason, but internally I might not until I have that bias. So like if I'm looking at this from like the model POV, right? If I'm looking for a structural disruption, then the structural disruption makes sense to look for in the premium of the range if we have a bearish trend, right? Because I rather because I'm in a premium, so that means I could technically be overextended for buys. Yeah, I mean for internal buys. Um, but the issue is that I just have to play based on the reaction because if I look at my trade again, right? I have this scenario, right? And I have so like let's say this low wasn't swept. If this low wasn't swept, and then we get a scenario like we did with GU or like we did with EU, right? Like with EU, perfect example here. Like there's a very big difference with the price action here, and I'm going to show you side by side. There's a very big difference with this here than with this here. There's a very distinct difference. Can somebody tell me the difference? between this and this. What is the difference? Nobody can tell me the difference?
Um,
What is the difference? Well, there's a couple of differences, but mainly I'm looking for one.
direction.
Okay, that's one answer. Can anybody give me another answer? This is very, very important. Very, very important. I guess no, nope, nobody. Yeah, it's basically the reaction. Because look, we can say, oh, this is bearish and this is bullish. Okay, but that's superficial. I care about that, but that's not as important. Because remember what I showed you guys at first with the EU trade here? The first thing I showed was that this was my bias. Right? I was looking for the sweep to the downside because we have a delivery internally that's bearish here. And then I would look for the transition. But because we went higher, that means that a solidified low internally was taken. Therefore, if the solidified high here is taken and then we break the solidified low, that is structural disruption. So if that's structural disruption, then I can now justify a move to the downside. But as we can see here, my entry was based on the sweep engulf, right? And if I was to be a little bit more conservative, like I said, I would have been able to wait for, or I should have waited for this low to be taken out fully. So once this low is taken out fully, that confirms the structural disruption because we have a high, right? And then we have the low, right? And even the low here, right? So even if you wait for this, then potentially there's a continuation setup you could potentially trade. But the point is like because we reacted here and then broke the slow, I can no longer be bullish. I can no longer justify this. I can no longer justify this if we have a reaction to the upside and then it breaks because of solidified points. We broke this solidified low. So if that breaks, I can no longer be bullish, at least not until this breaks, or we have another high low here and then that breaks, right? I have to look at solidified points, highs that create lows, lows that create highs. So that compared to this is very distinct because here I actually got the reaction, the sweep of the internal low, which means that we have a solidified high. So we have a solidified high, and then we had a high that created a low that then broke structure. So I then have that's my POI, that's my reference point.
Hmm.
You see, and that's the biggest difference there. And if you guys look at this, the reason why I took my entry here is because I don't really trade any efficiencies like that as much anymore, just because a sell to buy is an implied inefficiency. But whenever these gaps are so like clear here, like I just see them and I use them. Like that gap there is just so clear. Like if we go back to that, I think that was Tuesday, the 11th, yesterday, or 2 nights ago, because this was in London session. Was it the M5? Let's see. Yeah, here. Yeah, you see, when the gaps are so clear, I like to use them. Like there was one on GU this week. I was on H4. Was it H4? Yes, here. Like it was so clear. And this was gonna be I was gonna look to buy here. Like you see that? It's just so whenever they're so clear like that, I have to note them. Whenever it's just a gap that's extremely clear. And how do you define that? That is a conversation for a different day. But you guys know inefficiencies. You guys know how to see them. So if they just stick out to you and they're very clear, just note them, especially like on intraday timeframes and above. Clear, very clear. Just note them. They can be very beneficial. Because there's actually like a crazy nice scenario here. If you guys didn't see that, M5, there's structural disruption. See, so we came into that gap there, and I like that because there's actually a sell to buy there, which aligns with it. Very nice. But more importantly, if we have bearish structure, right? CBOS, we do have a solidification here, pullback. So it's high, low, retracement, solidification, and then based on that solidification, we see this. So an internal solidification, meaning we have internal leg, low, high, CBOS, solidification, structural disruption, because we have high, low, retracement, structural disruption. And this was like super A plus. Like I saw this in the morning. Like I woke up like around here and I was pissed because this is bet the house kind of trade. Like the reason why I say that is H4 clearly very we're here at the time. We're very bullish, right? And there's a very clear target at hand, which is this, the previous high, because we have low, high, retracement, continuation, right? And although we had a opposing structural disruption, right? This SD internally completely invalidates it because that shows me that we are no longer going to continue bearish, right? So based on this structure, I mean this structural disruption here, I can anticipate the bearish move, right? But there's just no bearish scenario at play. But once we have that internal conversion, which is the opposing SD, um, then I now align with the external time frame, meaning I can aim for here. And then this would have been like, this is just super A plus to me. I really like the setup. Entry, exit. Perfect. But yeah, let's go ahead and get to your case studies, bro. I don't want to ramble on too much. But yeah, but am I making sense here? Is this all making sense?
Yeah, yeah, thank you.
Mm, okay, this is I don't like the bias here. Low high retracement. I wouldn't I would rather like to see this break, have the LGC, and then look for the continuation up. Um, I would rather see that because although there's a high momentum here, we swept this. So now I'm looking at this range. So if I'm looking at a pullback, I don't see a POI here. This is too choppy. There's no POI there. So I don't like this trade. Okay, this looks much better. But I see why you're trading here. I just don't like where it is. I don't see this as a POI. If this would have swept the high, then given the move to the downside, then maybe. But more so, I'm seeing this also as potentially a failed reaction and then another failed reaction. So I'm personally not a biggest fan of this trade. But let's see. Yeah, see, so I don't like this one. I mean, it worked out, right? Did this work out? Oh, it stopped you out now. So I don't like that because, like I said, I would have at this point because we swept this low. I want to see rather this be broken. But if that does not happen, then now let's just say we're here. We then break structure again. Then that to me will confirm. But there's no real entry here unless you're looking at a POI like this, right? So then I would just rather wait. And then if I can see an LGC be presented, then I have a clear sell to buy here. I mean, buy to sell here. Sorry. And then I can aim TP1 here. So I would just say I like the scenarios that you're looking for, but I think it's more important to understand when to not take a setup. Okay, I like this. I like this. I like this is fine. I like this. Um, we did have this, but we do have a lot of bearish momentum, but we do have the engulfing, and then we have a potential LG, and then you have a engulfing there too. So I can see the justification, but I don't see the bias. Like what's happening over here? Okay, I see why you're taking this. But now that I'm now with this context, right? Let's see this. So we have a low into a high CBOS. So, oops. We do have structural disruption. So we have high, low, retracement, fulfillment. I mean, I'm not opposed to this. I see why you're taking this. I don't know if I would take it, but let's see. Yeah, see. So tell me the timing on this. What time is this?
I think this was New York.
No, your entry itself. What time? Like first hour of New York, second hour of New York.
Oh.
Uh, which time is it?
Um, London time because I stay in England.
Yeah, so this is 12. So 1 p.m. is a New York session, right?
Yeah,
So notice that at the open of New York, then there's a LG, a manipulation move.
yeah.
I would try to do that. Try to look into that, bro. Because I do like the setup. And either my majority of my trades are either in the first 2 hours of London or in the unless it's gold. Gold I will typically trade throughout London, New York. But try to do the first 2 hours of London and first hour of New York and tell me what differences you see there. Because I like the model, I just don't like the time. And I can tell it's a timing issue because of this, because of that manipulation move. It's like for my futures traders. If you guys like a lot of people would take a trade maybe before the open of the New York Stock Exchange open, and then you'll see the manipulation move that then aligns with your original direction that you were looking for, and then you see the move deliver
Mm.
because of the session volatility coming in. So I don't think this is a model issue. Maybe it's a time issue. Okay. Uh-huh. Because also, I promise you probably after this was hit, after we see this, I'm sure this came back and then went for TP. Is that right or no?
Yeah, it went so very, very high.
So then maybe stop trying to trade the transition and just let for the transition to fully appear. Because sometimes I feel like I get a little hasty too with looking to enter really quick because it obviously this is hindsight now, right? But internal bearish CBOS. So then once high that creates a low is taken, then that's a failed continuation. So look for something to fail. Don't look for something to appear, if that makes sense.
Yeah.
But yeah, let's look at this one. See, so the difference here compared to the EU one is this would have worked more than likely if let's say you swept a solidified point, but that's a little low, and there's no real solidified point being swept here. The difference here is that you're sweeping a solidified point, right? You're sweeping. This is solidified because we have that break of structure. So then if we sweep that and then break, then you have a structural range to play off of.
Mm. But,
So because this here, it matters, but realistically, we're still looking at the bearish move there. So I do like the setup, but that's why, because we solidified a low, we took out the low, and then we took out the high that took out that low, if that makes sense. High into low break.
I see.
High into low break.
On this one, I actually took it after the engulfing of. I entered here, then I break even after we took out this high. Then it's break.
Yeah, no. Yeah, no, bro. This is the break even protocol. Stop. Actually, bro, just stop going break even. Just stop and then see what happens.
Yeah, bro.
Because even if you wait here, this is the perfect setup here. Because you now have high into low, technically CBOS because this is a structural range. Then we have a solidified high because that breaks here and here. Well, maybe not that one. Maybe that's not as important, but we do break structure here. So then this is a solidified high. So then once that breaks, you now have a clear structural range with a clear structural target. So maybe even be a little bit more conservative. Like think of whenever you're looking at these moves too, look at how many candles are in the time frame of your bias. So if we're on M10 and we're looking for M10 high as a target, then if you're using the like let's say 10 candles compared to what your bias is being framed out of, which is like 50, then you're probably looking at too small of a time frame. So let the amount of candles play out. Like, does that concept make sense, guys? That's a concept I picked up once I started trying to code the concepts, where I'm telling you everything is based on axes. Yo, what the? Hold on. Who is spamming my chat? Who is spamming my chat? Hold on. Sorry, guys. Um. Anyways, yeah. Look at
Are you
X
talking
and
about
Y
the
axes.
distance momentum thing?
It's a momentum thing, yeah. It's definitely a momentum thing. Time and distance.
Okay.
Um, for example, there's criteria sometimes on the distance of candles for it to be considered a structural range. And that's actually something I'm going to be diving more into like next year. Is like I said before, it's just like if you want to trade a M15 continuation, okay, like what does that mean? Like like what does that mean? Because just because I'm on M15, that doesn't mean I can use every single range. So the distance from the high to the low is very important relatively to the structural level that we're looking at. So I think a good frame is like 20. If you guys are looking into that, start like a good starting point would be like 20 candles. It's actually like not bad. As a threshold, like either after 20 candles, then you consider it a range. But that's just still that's something I'm still trying to test out. But that's like this is you're trying to focus on micro moves that isn't really relevant to the range that you're or the time frame that you're playing at, if you get what I'm saying.
Yeah.
The higher time frame candle indicator really helps out with that perspective. It does, yeah, it does, it does. Okay, this is much better. So you see, even if this loses, I want to see you take more positions like this because you're letting the transition occur before you look at the entry. So we have a potential sweep scenario here, right? You have the sweep because you have a range, and then you have the transition. So we have a SD here based on bullish structure, and then you have a high like right to low, and then you have the reaction from the pullback high. I'm sure once it solidifies, you're taking the entry. What is this for? Yeah. So I like this entry. This is a good entry, right? Is this going on right now?
This
Oh
is
no,
good.
this is
This,
2 days ago.
yes.
You didn't give me the result for that one
Uh, oh, sorry. I thought I did.
because here, and especially with these types of scenarios, because gold is just super bullish, I would take a partial here. You would have to take a partial there because gold is bullish on every single time frame. Because this
Yeah.
transition this entire move can completely change depending on the reaction of when we take this low. Completely, it can completely change the entire bias. But yeah, what? Let me guess. This like hit TP1 and then transition.
Yeah. That's what I did. Exactly what I did.
Yeah, because gold is just super bullish. I don't really like selling gold like at all, especially just especially with where we are right now, and with dollar going down. Yeah. So and then this is where I think I took my buy position after that sweep. I think that's why I'm saying that. Okay, 4. Nope, this is 5. Okay, bear structure, CBOS. I have to anticipate this to be ran. And yeah, so this is the scenario I took, but the other way. Just because I was looking at I took my buy here. Yeah, so you see, this is what I meant earlier with it wasn't a good scenario, just because kind of technically had to anticipate that. So look, I promise you that silver probably took that low out. Let's see. What time was it when that happened? Yesterday, 7 a.m.
Yeah.
Okay, no, it didn't. It didn't. So there was no divergence there. There was no divergence there. Yeah, but anyways, yeah, bro, this is not this is a buy. But your invalidation is also still going to be here because if this is a structural range that you're playing off of, you have to put your stop there. Mm-mm. I don't like this at all. I don't like this at all. This is bullish, but you have SD. So this is bearish, high, low, retracement. This should be aiming for this low. I don't know. This is not a good trade at all. The only way I can now, I would say I would want to take this scenario is if we break here. If we break, then now I'm looking for this to then aim for here. I just think this is too aggressive because this is like again with the point of like if you take a winning trade, a lot of the time that same scenario has the possibility of losing. So just because you have one winning trade on a model doesn't mean that it's a good model. Yeah, you see? So perfect. See, so now that I saw this break, now I have my frame and now I can aim for here. Yeah, break even, bro. This is a no. This is that's a terrible break even, bro. This is not a break even. Why are we putting our break even here? We have a low SR. Break even is here at the best.
No,
So I saw this.
I actually break even because yeah. So I put my break even here before, so I just said it to here because we already have that reaction. So I was assuming that we'll take out this high, then roll over, and just stop the high, then move on.
No, no. You're focused too much on this on M1 moves. That's an M1 move. Sometimes you need an M1 opposing move to give you your pullback for the external move, right? So if you want to trade this pullback move, you need bearish structure. Right. So technically, you could even argue there's a POI there, but you need microstructure to go against you to get the pullback for you to trade this discount. Because if we're looking at low, high equilibrium discount, you need the micro bearish move. So from here on, just stop moving your stop, bro. Stop moving your stop. It's it's not working out. But here, this entry I don't like. I would much rather wait for the failed move because here if we have to look at the internal bear structure if you want to trade the bullish pullback, right? So this is bearish, CBOS. I have to consider this high to be solidified here and then continue lower. But it's until that fails that I can trade it. So look for moves that fail. That's the key to all of my models. You have to look at something, a failed scenario. It's not about trading a continuation play. This continuation play can only happen if the internal fails. So I may be trading directionally aligned directionally, but internally something has to fail for me to assume that this is the pullback low. But yeah, like this is not a bad trade at all. But this I don't like how you went about this entry. It's just not something I would do. Okay, what am I seeing here? I think let's see. Um I mean the bias is fine, but you have a buy to sell there. So I would just use the entire buy to sell. FOMC. I mean news doesn't matter. It doesn't matter. It's all the same. You could either the news is gonna support the transition that just happened, or news is gonna cause the transition. It's just one of the two. So here we're like, I wouldn't be able to tell you that news happened here. Like for example, we're bearish structure. We have CBOS. Technically we have structural disruption, so meaning the internal structure here is bullish, right? But then we have low, high, CBOS, and then it's until this occurs, which is a structural disruption, that I can now continue bearish. So then if you were to trade that, then I guess that's semi-conservative, but the risk reward may not be ideal if you're looking for a previous low. But do you have any more questions, concerns, guys? Because that's, I think, all the case studies I have for today. Also, if you're in the Discord, add the server tag. I think it's really cool. I've always thought that was really cool, and I finally came around to adding it. But yeah, let's see. Oh yeah, and also quick tip with the leveling tiers. Let's go back to the public leveling tiers. Um, this is important. If you guys post in the success tab, don't conversate in here. If you conversate in here, I will delete it. And if it happens occasionally, I can like lower your level if I want to. That's a Nitro only thing. Yeah. Actually, I have some gamer friends and they put me onto this website that gave me like the Nitro subscription for like a year for like not that expensive. I paid like $80 for it because I think it's like $100 or something like that. Um, okay, good. I'm glad this did not show. That's cool. Anyways, Nitro offer. Yeah, the Nitro costs like it's like 99, it's like 99 a year or something like that. But if you do get Nitro, I would appreciate some boosts. Um, I'm actually considering like so like if we go to the premium lounge, it's something I'm considering. I'm not like 100% sure. But let's see. Where is this? Oh, here it is. If you go here, if we like I have like my case studies, right? I'm obviously not gonna I can't click it because then you'll get the stuff, right? But if you see this, or if people add like boost to the server like consistently, like I'll have a setting to where if you boost the server like X amount of times, then I can make this like relevant, like I can show this to anybody who does that. Like it's like a subscription thing, right? Like if you're helping out my server, I don't make any money from it, but if you're helping out my server, like I could make that like a cool little thank you. I can make like exclusive case studies, which are case studies that aren't public, because every case study here I record, but I post them on YouTube, but they're not like public. But I don't know. I'm still considering stuff. But yeah, if you guys have extra boost, that would be cool. But yeah, back to the topic. I kind of got swayed away there. Uh, where is this? Here. So if you post in the success tab, like it'll give you double XP. So like if people have results and stuff like that, like I greatly appreciate you guys posting this stuff. This is really cool. So once I release also my other products, then hopefully those can help out a lot, and then that could just like promote, help promote the group a bit more. But yeah, if you guys don't have any more questions, I think that'll be it for today. Pretty long session. It's been like 2 hours, I think, or like an hour and a half. I have one more, but it's more of a discussion. I mean, that's fine. I mean, we can talk about it, bro. I'm not in a rush. This is fine. I just I don't like this scenario because we're bearish still internally here. So like if I'm gonna take this type of scenario based on this entry, I'd rather just wait for this. But yeah, automations are going well too. I'm still trying to figure out a solution. Um, how everybody can win off of this. I think we're gonna stop Asif. We're gonna stop the bots on I think at the end of next week. But yeah, it's pretty neat. We just hit 30% on I think we did it in like 8 weeks, 9 weeks ish. No, 3 months, sorry. Just about 3 months. 3 months on Monday. Yeah, let me see. We just crossed 30%. But yeah, really neat, right? Pretty neat. Um, okay, so we see the bias.
Yeah, it's a poor markup. I just got off the road from working. I the thing is with this, it's like almost I hate to use this. It's intuition based. I know that the overall move on gold was bullish.
Uh,
So with that screenshot you're looking at there, um, that's a massive bullish engulfing on an internal time frame and a POI that I really liked. So when you see that massive momentum come in after a sweep, the issue is that I forced an entry above because we never tapped that POI. We left
mhm,
it.
mhm,
And then you do take out internal structure, and then you do have an internal SD
mhm.
because you have a reaction, you take out the high, the wick down, but that at that point you now have
Now
right
it's
before my
FOMC.
entry. This is FOMC,
Yeah,
so right
FOMC.
before my entry, you have an internal bearish transition. You have, I mean, I guess you'll say what LGC.
Here,
Uh,
or
where's your
you're talking about here.
so just before that entry, yeah, just before
Yeah.
that, there is kind of like a, you solidify a high. So internally, you're bearish, and I'm so married
Are we talking about here?
even further over, like right before my entry. So yeah, there.
Hmm. Yeah, so that's pretty much what I just told Nathaniel here.
And the next
He
picture is actually a zoomed in version of that.
he gave me the exact same scenario here, if you can see. He gave me the exact same scenario. So like whenever I see a PO, like, so let's say we have our frame, right? And then we see a reaction occur before the POI. If that POI is then hit again, I'd rather not trade it and let it create a bias, because this is what led, like, using this frame, like based on the POI that you had, the FOMC, and then that big reaction, that's what created the frame for me to trade this, which was the original trade that I showed earlier. Because I took the trade here based on if we go here, there was a M15, M30 engulfing here, M15, M30 engulfing, but I was only looking for the bullish bias because of what FOMC caused, which was, so we have another sweep model here. If you see this, there. So, and then we have a dual sweep, which is one of the implied sweep variations. So like if you have the dual sweep here, yes, we're bouncing out of the POI, but that's just extra for me. All I care about is that we have a high that created a low that then took out, and then that's my reference point. And so then I use that reference point. If it's too big, like it is here, because I'm aiming for here, then I then look for the internal move. But in terms of like trading this, I don't want to trade that.
That was my exact issue. Is I knew that was going to be again massive liquidity coming in with FOMC, especially with gold and Nasdaq. Kind of had FOMO that I was going to miss the move, so I
that's all it is. That's all.
Threw a lotto ticket at it. It was very small sizing, so I could get in on that move. And then so the result, the POI that it left, is massive. So that's why I sent you the next two screenshots. Even catching that continuation move, I still feel like I took too aggressive of an entry. I mean, they all played out, but I think I take losses.
Oh, hold up. Pause. Okay, wait, it's not even my broker stuff. It's fine. Okay. Yeah, continue.
If you pull up the second or third screenshot, no, it's the third with my ad. Because even my ad, I think internally you are bearish. I'm taking a reversal off of something that's not even.
Well, yes and no, because this is one of those, like, for example, my entry was here. So yes, like technically, because this is bearish, we have CBOS and we anticipate this to take out the low. But I like where it's bouncing out of. But however, we can still have this sweep without invalidating the whole scenario. But the thing is like, if the slow is to be taken, then you have LGC, which means then in order to be bullish, like then they would be technically bearish. So we would have to anticipate that. So like it's fine because your invalidation is here, but I just care more about if this setup is like replicatable.
Could that second entry, my ad? Again, I haven't seen the sweep.
That would be, it would just have to be based on the criteria. It would be based on the criteria, like depending on what you're looking for here. Like, let me see if there's another time frame.
And that was going into New York session too, so I kind of assumed. And again, that little
manip.
I thought that was my manipulation move, and I tried to catch the bottom of that. But I think I've gotten burned so many times doing it.
Like I wouldn't have been able to trade that. Because like I'd rather miss out on the trade than take a trade that if I was to take 100 times, I would lose more. But I do like is that an engulfing there?
It is. So that's the other reason. Once I got that reaction, but it never.
It's an M10 engulfing. I mean, sure. I mean, if that's what you base your entries off of, is sweep engulfings on a certain time frame, then that's fine. Because you're framing the bias based, like your bias is correct. So like, as long as your bias is correct, as long as then the entry that you frame is aligned with your invalidation, then you're fine.
So I had the same invalidation as you. I was just late. Yeah.
I mean, not really late. If anything, you're early to the real move.
Yeah. But see, at some point, like I'm missing, where would the entry be if you have a pretty large stop?
I mean, that's relative though. Like that's still great risk to reward. Like anything above a 1 to 4 to me is really good risk to reward.
Oh no, I'm saying if you slide up on your screen, if you slide up where that engulf happened, that M10 engulf, that's pretty large.
I mean, it's just about the same size as mine.
No. Oh. Let's see.
Because the stop, I mean, I guess maybe for props that might matter, I guess, right? The stop loss size,
Sure.
which is like 90 pips, nah, you know, 10 points. But it's the risk reward for me is what matters there. The risk
I think
reward and then
I
the
prefer
probability.
yours. Yeah, I prefer your end because I'm assuming it's a sweep, but really that technically isn't. You didn't take out that last low, so it's not an LGC yet.
Let me see. The only other thing I can think of is like if there's divergence with silver. Divergences are actually really cool. I really, really like them, if I'm being honest. Nope, not there. Yeah, see, so if you trade pair divergence, like this is like a different type of model. But for example, divergence. So divergence engulf, that is that's another popular model. Like I think it's called SMT. Like that's what people call it. But these discrepancies, these divergences, they're very effective. Like it's just a matter of putting the context around it. Like there's like an entire like I think most of the ICT guys trade this type of model. Like they trade the whole like sweep, uh SMT divergence, and then I think like an internal break or something like that. So like maybe here they would hit buy or something like that. But personally, like if you want to make your own model, like try to backtest this. Look for reference points, look for pair divergence, look for engulfing. I would start with like M10, M15, and then see what kind of results that can yield you. That's an interesting little model you can make.
Cool. Thank you. I appreciate it.
Cool. So do you have any more questions, concerns, guys? Any questions with the Discord? Anything like that before we hop off?